All right, guys, we're going to be looking at using higher time frame analysis and short-term trading. Short-term trading, right, are going to be trades that are lasting from a few days to a week, right? We're typically going to be using the 4 hour and 1 hour, right, to actually enter our trades, but we're using our higher time frame analysis to frame our setups. So the main thing that we want to focus on primarily is going to be the last 20 days of price action generally. Now there are exceptions and we sometimes do have to look back further, but generally it's going to be the last 20 days, right? And we're going to be looking at our higher time frame PD arrays. So we're going to be looking at, our weekly and monthly and daily order blocks, fair value gaps, so on and so forth, right? What we're trying to do, right, is look at our institutional order flow and determine, right, the likely direction of the weekly candle, of whether it's the present week or the next week. Okay, so however, even though we're looking at these higher time frame setups, basically, right, we're not gonna just throw away time and price. I still don't want anyone entering randomly in Asian session or anything like that. So let's get into it. All right. So understanding the higher time frame base is the basis, right? So we have to understand the higher time frame before anything else. So when we understand our underlying direction, right, this is going to be our institutional order flow. We're going to try and tie that in with how price moves from a premium to a discount. Now, if we understand that price is moving bullish, right, on a very the weekly or the monthly or even the daily time frames, right? Say price is moving bullish. We've had a set of higher highs and higher lows, right? We understand the institutional order flow is bullish, but we also understand that we are moving into a premium where uh, if our fundamentals and our data and our seasonal tendencies come into play, we could be looking at a quarterly shift or seasonal shift, something of that nature. All right. Now, you have to understand that using our fundamentals, right, using our COT, open interest, and um, things like that, interest rates, and then also, what's going on in the world, right? Like right now, the coronavirus, um, it's affecting, confidence in the stock market, and that has rippling effects throughout the currencies and commodities and uh, agricultural markets. So everything is connected. All right, so you're going to want to understand the fundamentals and the data that you are given, right, and that you can look up. These were all taught, right, in previous sections. So we're order blocks and breakers and everything, all the PD arrays and everything that you need to know for this video has already been taught to you in previous lessons. So if you don't understand or know what these things are, you need to go back and watch those first. Now, already stated that our preferred time to take setups is going to be the 4 hour and the 1 hour charts. At least that's my preference, right? And we're going to be looking at PD arrays in key areas, right? So we're going to be looking at our weekly and our daily order blocks. We're not going to be looking at 15-minute order blocks and 1 hour fair value gaps and like even most 4 hour PD arrays are not going to be necessarily the best to trade off of when we're looking for short-term trades. Now, our goal of short-term trading, right, is to trade in the direction of the weekly candle. So I want everyone to understand, right, the skeleton behind the weekly candle. Now, when we're looking at the weekly candle, we're basically looking at this right here, right? We got this first horizontal bar to the left, right above equilibrium of an imaginary range, right? I have the premium and I have discount marked up. The blue line is equilibrium. Now, when we're understanding how price moves from premium to a discount, discount to a premium, we have to understand how the weekly candle works, right? And this is not even just the weekly candle. This is the monthly, the daily, even all the way down to the 1 minute, right? So we understand that if we want a bullish week, right, we want to see price open, trade down, expand to the upside, and then close. That's what this right here is showing us. So we see price open here, trade down, right, through equilibrium into a discount, right? That's the key right there. We see price open up, trade down to a discount, and expand to the upside into a premium where it closes. Now, this is a very, very crude depiction, right? But based on this, right, price would have opened, right, let's say in the middle of this range, and traded down into, say, a daily or weekly order block, or a pass an old low and grab liquidity, or maybe it traded back down into a BISI, right, a bullish order block, something of that nature, right? It traded down into a discount array, right, that gave support to it, so to speak, to expand to the upside. Now, this is what short-term trading is about. It's catching this weekly expansion to the upside. Now, using our higher time frame analysis, right, what we're doing is we're going back and we're marking our range from premium to discount or discount to premium, depending on the bias. And we're marking up our higher time frame order blocks, fair value gaps, old highs, old lows, all of these things. And then we're watching how price reacts to these levels. We're also looking at how price opens up. If price opens up and trades bullish, right, this gives us an indication that we could be headed for a bearish week. This is not always the case, but it's a higher probability. Now, if we trade like this in a deep discount where we trade up first, does this mean that we're going to trade down for the rest of the week? Not necessarily, because we're at a deep discount. Price could reasonably just be expanding to the upside to open the week. But if we're expanding to the upside at a premium, right, this can give us reason to believe that we're going to go trade from a high premium trade up and then trade down towards a discount, right? Because price is always moving from premium to discount and discount to premium. You just have to determine your ranges and understand the higher time frame behind these and how it affects it. So in this example to the right, we have the opposite, right? So the first one was a bullish example for a bullish week. This second one is going to be a bearish example. So we're looking at how price opens up and trades up into a premium, right? And if this is our range here, right? This is our range. Say price, there's an order block here, right? Between this line and this line, right? Right where it says price trades into a premium to open the week. When price trades into a premium, that does not mean that it just trades above 50%. Yes, it does, but it has to trade into some form of a PD array in order to trade off of, right? Whether this is a SIBI, an order block, a breaker, right? It does not matter. As long as price is trading off of a premium array to trade down into a discount, that is what we're looking for our trade. Our trade right here for the weekly expansion would be a sell at a premium down into a discount. Now, it's not always going to be clear cut, but I'm going to try to make this as simple as I can. So when we're short-term trading, right, you should automatically have the monthly and weekly PD arrays marked and color-coded because you don't want to get it mixed up with your daily and your 4-hour whenever you're looking to trade. You want to know what you're looking at, and if it's not color-coded, label it, right? It's worth the work. You want to know what you're looking at when you go to enter a trade. When you see price approach a line, you want to know what that line means. When you see price approach a highlighted box or however you draw your charts, you want to know what is that. And if you do, you want to understand how is price supposed to react off of that. Now, when you're trying to determine higher time frame institutional order flow, right, the likely direction of the candle, you want to look at where is price, right? Am I at a premium or am I at a discount, right? And how has price action reacted off of a level that is traded away from, right? So where was price last week? How did price trade, right? And then once we determine what our bias is, right, we want to also determine, okay, what's going to allow me to enter the trade and where am I going to take this trade to, right? And this is all going to be the outlining of your short-term trade. Now, If we're looking at this chart, for example, I did XXX, XXX weekly just because I wanted to let you put your own pair in there, whether it's GU, EU, GJ, any pair you want, right? This works for every single pair. You put it in there. This is what you're going to be doing, all right? So you want to determine if we're at a discount, like in this chart. As we can see, we have our high here all the way down to our low, right? And we see that this previous week's candle, right, this green candle, has broken out or broken above this the week before that last down bearish candle. That creates a weekly bullish order block. And on the daily, there's a market structure shift. So what we're doing is we're determining what would we expect out of our next week, right? So what I'm going to outline in this chart right here is just going to be an example. It's not always going to be so perfect, but it's going to be the one that I'm going to use. So we're looking at our higher time frame. This is the weekly, okay? So with the weekly chart looking like this, right? We have a order block here. We have a SIBI in here, sell side imbalance, buy side inefficiency, right? And we have our bearish order block here, right? So if we're looking at this, we're going to say we bounced off of a level of support, right? Whether it's an old bullish order block or we took out a previous low and grabbed liquidity, right? We're going into April, and we're for this instance, we're going to say it's euro. We have a bullish tendency in euro to be bullish, right? In April for the second quarter, basically, right? So if we're looking for bullishness already with the seasonal tendencies and the fundamentals backing us up, right? We're just going to give it the benefit of the doubt that our fundamentals are backing us up on this. What are we looking for out of the next weekly candle? Well, we know the price has to trade into a discount. As a whole for the range, right, we are at a discount as equilibrium would be in here. So that's step one. Are we at a premium or discount right now? As a whole, we're at a discount, but we want to see price trade where to open the week. We want to see price trade down. So when price opens up, we would prefer to see price trade down, right, into a discount array or a bullish order block, something of that nature, right? And then trade up into a premium array. This is what we should expect. So now let's go to the next. Here's our chart. Made it a little bit bigger for us. And I marked up our daily bearish, or actually this is supposed to be weekly bearish order block, weekly bullish order block. I totally messed that up. This is the weekly chart, my bad. This is our SIBI, right? Prices traded up and closed here. Now, the next week, right, we're looking for a bullish candle. So what we'd be looking for is an open in price to trade down and expand to the upside. Here, we see price open up, trade down to our weekly order block, all right, our higher time frame order block. And this is just an example, guys, remember. Price trades down to our weekly order block and expands to the upside. Now, where do we expand to? Well, remember in the last chart, I said we want to understand, right, the price has to trade into a premium and a premium array, right? That's going to be our target. So our trade would be a buy off of the bullish order block here and traded maybe to the fill of this SIBI or maybe to this bearish order block here, right? It's up to you in the end to determine where you want to take your trade to. For this instance, we're just going to say that we took it to the fill of this SIBI, right? So our one shot, one kill, which is our trade for short-term trading, right? It's the preferred one. We're going to hold for a majority of the week, right? Because we want to catch the bulk of the weekly candle, the bulk of the move for the week. So what we're looking at is a buy scenario where we trade into a discount array, right, at a discount in the range and trade up into a premium and premium array. So this is what that would look like. Price fills in this SIBI, taps the daily bearish or daily, sorry, weekly bearish order block. I should correct this. And then closes inside of this SIBI. That would be our example of a short-term trade, right? We set the low on a Tuesday, perhaps Wednesday, doesn't matter, and we catch the weekly move up into a premium where we take our profits, right, and we close out. We're not taking a trade every single day, right? We're trying to catch the bulk of the weekly move. All right. Now we're looking at this, right? Weeks can look very, very odd, right? So for instance, this weekly candle probably looks like a tree or something, right? Looks pretty weird. What I've done is I've color coded the open, the low, the high, and the close to match up with the chart here. So this is the 4-hour chart, right? And we're looking at what this looks like. Well, we see price open here, right? Trade and trade down into a premium or into a discount, right? So when we trade down to a discount, our one shot, one kill, or our trade of the week would be a buy, right? A buy trying to catch this off of this discount array, trades into some discount array over here, right? Up into a premium where we take out these equal highs here, right? Something of that nature. And I'm just going to go through another example with you real quick. Here's a more normal one. And as we go, you'll see each one how the candle can expand or contract, right? So the last one was really, really tight. Our open and our close were almost right next to each other. This one is a little bit more spread out. We see price open here, right? And trade down into a discount. This is a Tuesday, right? Again, the 4-hour chart. And price trades here and up into our premium, right? So whatever premium array we had here, it could have been this. This could have been our premium. Equal highs here. Price sets equal highs again. Price trades down back into an order block, right? And expands to the upside. This could be your take profit. You don't have to hold and catch from wick to wick. It's very, very difficult to do that, but you want to be able to take the bulk of the weekly range, right? And that would definitely be sufficient here, right? You're catching 2/3 of the weekly move, trading from a premium array, right? Using a weekly profile, which will be taught in the next lesson, to trade this bulk right here of the weekly move. Now let's look at one more example. As you can tell, this one is really expanded. So this candle would look something like this, right? You want to see your open, right? Trade down into a discount, trade down to a discount, right? And then the weekly expansion to the upside. Do you have to catch this whole move? No. This or this would both be sufficient. I guarantee you, right? This right here would not be my take profit, right? Because you're looking how price is trading. This is again the 4-hour chart. This is the week beginning to end. Price trades down, right, into some discount array, right? Up, up, up. And then notice we stall here. This looks like the end of the day on Wednesday. Looks like Thursday London here, right? So, and just for context, this is the euro. So price sets these equal highs here, right? Sets these equal highs here. This looks like it's about London Thursday, right? So if we're trading here, we know we have equal highs. We're bullish for the week. We can take off some of our trade, right? And allow the rest to run to finish off the rest of the weekly move, all right? Because we still want to catch the bulk of this weekly expansion. So using, right, our daily and our weekly and even our monthly, right, we're looking at levels, key levels, where we have premium and discount arrays, right, for price to trade from and to trade to. From and to. We do not have to catch the entire move. Now, some things that you can add, right, to trading, which I will discuss in the next video, will be Sunday opening price, price swings, range equilibrium in terms of premium and discount. So I kind of explained that in this one, right? And then also our weekly opening gaps. So I appreciate you guys, going through this video and look forward to teaching you in the next.